So what will the housing market look like under President Trump's new economic plan? In this video, we're going to talk about the 2025 housing market, what the 2 or 3 biggest policies are under Trump's economic policy, and how it will affect housing in the likely scenarios, and also what I would do personally if I were him. Now, I'm an 8-figure real estate investing entrepreneur, so if you watch this video, not only will you win every single Facebook argument, but also those political debates that you get with your uncle, who looks like should vote for Trump, but actually votes for Bernie. So with all that said, here's what I believe is going to happen in 2025 to the housing market, and these are opinions that I formed way before I thought Trump was going to even be back in office. And number one is stronger demand. And this is because when we look at the interest rates, they're more likely to decrease than more so to stay stagnant or increase. And we all know that when interest rates decrease, this brings on a whole new wave of potential buyers entering the market. In fact, this is courtesy of my good friend, Mr. Jason Hartman. I would encourage you guys to check out his YouTube video where it shows, visually speaking, for every X amount of basis points that decrease in the mortgage rate, how many millions of new potential Americans enter the housing market, which in layman's terms pretty much means that the cost of being able to borrow that money for individuals to buy a home is going to be cheaper, meaning that monthly payment gets cheaper, which means that obviously a lot more Americans are going to be able to enter in to mortgages and have capabilities to borrow more money. Now, the second thing that I believe is going to happen is really my primary prediction for what I believe is going to happen to the housing market in 2025, which is it's going to be a K-shaped market. And what I mean is that certain states will have housing prices and rents, by the way, overall housing costs decrease, while other states is going to increase, which is typically actually not common if you're thinking about a real estate crash or even a real estate boom. And you might be asking, well, Daniel, how is that going to happen? Well, first and foremost, as a response to the historically steaming hot market that we had in 2021 and also in 2022, we actually ended up building more housing units than any other time in the last 50 years. In fact, you can see this chart right here from the Federal Reserve Data Archive showing that more housing units, both single-family homes and multifamily buildings, were built than any other time in the last 50 years. And with the exception of the years leading up to the Great Recession about 15, 16 years ago, we can also see historically high numbers of single-family homes being built as well. But of course, not all of these housing units being developed are being distributed equally across the United States. You have states like Texas, Arizona, Florida, Tennessee, and the Carolinas that are by far the leaders when it comes to number of housing units being developed. In fact, here are the 7 states currently with the highest inventory surplus rate, which means that they have more homes in inventory than the demand can meet, with Texas and Florida leading the way. And this is what I mean by a 2025 K-shaped housing market, because if the mortgage rates and interest rates drop, which is very likely at this point, well then you're going to have millions of new potential buyers entering the housing market. And while you have this nationwide federal demand for housing, you have states like Texas and Florida who have arguably overbuilt because of their massive inventory surplus rate. And well, when you have nationwide demand, but all of the supply is very unique to just particular areas in certain states, well, then you're going to have housing costs like rent and also housing prices naturally go down, which I would argue is great for the American people. But on the other hand, with the nationwide new demand of home buyers, you also have states like my home state of Illinois who have practically built 0 houses. So of course, if you have a new wave of potential buyers but very little inventory, it's exactly what we've been seeing the last 5 years, where home prices not only may be steady, but they also might continue to go up, thus having a K-shaped housing market for 2025, maybe even 2026. Now, this is what brings us to the Trump administration and their 2 or 3 biggest policies that I believe will have a major effect on the housing market, and I'll break down what I believe those effects will be. By the way, do you like how when I was talking about Trump, I did this, this is the first time I'm doing it the entire video. Okay, anyway, sorry. Now, one of Trump's biggest proposals in his economic policy is to actually cut regulations for developers, which ironically, Kamala had the same thing in her economic policy, which we did a video on that a couple months ago. Now, here's what I found really, really fascinating, and this is where I believe the effect into the housing market is going to take place. Because according to the National Association of Home Builders, they've actually found that regulations add an additional more than $90,000 to the cost of a new home, which, by the way, as somebody who has done development projects before and have many friends that do home developments, I can absolutely tell you that's very, very true. especially if you're in a state like Illinois, California, New York, where a lot of these homes are needed, right? I mean, you have a lot of people living in Illinois, California, New York. I mean, these are big states who have the three largest cities in the United States, by the way, and it is an absolute nightmare. Not only does it cost over six figures, it also costs a lot of time, like 6 months, 9 months, 18 months, just to get something passed that really could take a couple hours to do. Now, does that mean cutting regulations will directly lower home prices? No. At the end of the day, the market is what dictates the housing prices, not the developers who complete the end product. But does that mean that housing developers will be able to lower the cost of their product if the market allows? Absolutely. In fact, the good news is that the way you get the market to decrease cost of housing, that's rent and housing prices, you do it by organically adding more inventory, which in this case will be much easier because of the Trump administration's policies that will affect the 2025 housing market and the housing market actually moving forward. Now, that's awesome, but we also have to address the big elephant in the room, which is another policy that a lot of people are worrying about, which obviously is the T word, tariffs. And President Trump has made it really, really clear that his administration will rely a lot on tariffs for government revenue. Now, here's the issue with that, because a lot of individuals, economists on both sides, are saying that tariffs may very well increase inflation. In fact, it's already gone up as a result of Donald Trump becoming president-elect. And what that's going to do is it's going to do a lot of different things. But first and foremost, it's going to decrease, I believe, in my opinion, the bankability of the average American. Because as we all know, inflation is the hidden tax. When all of a sudden your expenses, especially your monthly ones like groceries, gasoline, bills, right? If all these expenses go up, well, that affects this thing called DTI, which is your debt to income ratio. And that's one of the key numbers that a bank is going to look at when someone's trying to get a traditional, conventional 30-year loan to buy their dream home. And well, if inflation does swell up and it does become a serious problem as a result of tariffs, well, that's going to be a big problem for a lot of the home buyers here in the US who rely on their DTI to be able to get these loans. Now, could that be offset by the decreasing of mortgage rates? Absolutely. Could prices potentially even go down? Maybe. But it's one of those things that we'll have to see. Now, the second thing that tariffs can absolutely affect is not only the inflation with our regular expenses with us hardworking taxpaying Americans, but it can also increase the cost of materials, which home developers and builders desperately need to have be down, especially if they're trying to pump out affordable products. Because think about it, if you're a home builder, you're going to need wood, you're going to need copper, and all sorts of different materials to build that home. And if any of those materials are shipped from a foreign country like Canada, Mexico, or really anywhere else in which the Trump administration is going to place tariffs on, well, that's a big issue, because 9 times out of 10, a lot of these developers and home builders are going to pass that cost off to the consumer, to people like me and you, and well, that's obviously not a good sign. Now, the third thing that tariffs could potentially impact is the strength of the 10-year US Treasury bonds. Because, well, we all know that a lot of times these mortgage rates in which people use to borrow money to get their homes is many times dictated by what the US Treasury bond yields do. And, well, the Treasury bonds are predicated on the strength of the United States economy. So if the US economy potentially gets weaker, or if inflation becomes a massive problem, well, in that case, there's no chance that rates are going to go down because, as we all know or may not know, a lot of times what the Federal Reserve tends to do, if inflation is very high, they'll decrease the federal lending rate to fight that inflation, which means the cost of borrowing money will be much more expensive. Now, with all that being said, here's what I would personally do as an 8-figure real estate entrepreneur. Not that my opinions matter, but if Trump were to call me right now and go, hey, we need you in the cabinet, you know, we already got many Asians, we need more Asians, right? That was my impression. Very bad, sorry. But here's what I would do. Because at the end of the day, 90% of the issues and the challenges and obstacles that the average hardworking American that wants to buy a home has relates back to inventory. That's why in 2021, 2022, and even 23, people had a really tough time trying to buy their first house. It's because there just wasn't enough inventory, especially in states like mine, which is Illinois. So what I would do is I would absolutely offer tax incentives to home builders, but not in all states. I would actually pick and advise President Trump, hey, let's start with the top 15 states where we have the lowest inventory rate in relation to qualified home buyers at this particular mortgage rate. And let's find a way to increase tax incentives for builders to go build over there so that we have a much more balanced housing market and we don't have individuals that are forced to move states just based on affordability. And these tax incentives don't have to be massive, they just have to make sure it covers certain margin points for these builders and developers that at the end of the day are looking to make a profit and won't go to a particular market unless there's profit to be made. So not only would I cut regulations, but to add on to that, I would add tax incentives, especially for builders to build in markets that desperately need more inventory. And that's going to allow for more individuals to organically be able to get in homes without having to have their finances be stretched way too thin in order for them to be able to actually live in a home that they want. So again, let me know your thoughts below. If you disagree with me, if you hated my Trump impression, let me know in the comments below. And until then, guys, I'll see you in the next one.